The information provided on this website and in our communications does not constitute financial advice and as such should not be relied upon. We recommend speaking to a qualified mortgage advisor to assess your individual circumstances before making any decisions. Your home may be repossessed if you do not keep up with payments on your mortgage.
Hi, Sean Coleman here again with Quiz the Broker. Next question. What is a fixed rate? Okay, so fixed rate, as the name would suggest, is the interest rate that you pay on your mortgage that is fixed for a certain amount of time. They tend to be anywhere between 2, 3, 5, 7 or 10 years. Historically, in the UK, we like short-term fixes, short to medium-term fixes of rates. Because everybody likes to think that they're getting the best deal, so they don't want to be tied up for too long just in case interest rates drop. Similarly, they don't want to be tied up for the short term because they think that, well, hang on a minute, I don't want to be remortgaging so quick. So 2 and 5 year tend to be the most common lengths of fix. What they actually mean is that you are guaranteed that your rate and therefore your mortgage monthly payment will not increase for that time that you're in the fix. So it's really useful, especially for first-time buyers, where maybe you're worried about what your other expenses might be in the house. You might be having a new family starting out, and you're wondering every time you watch the TV and the rates, and they say, oh, mortgage rates are going up or mortgage rates are going down. You think, how is that going to affect us? The benefit of it is, as a fixed rate, you know exactly what your payment's going to be for that amount of time, so you can budget accurately. So they're really useful for that. They're not good for everybody. Okay, so one of the penalties that one of the offsets, so it's yin and yang really. The lenders will, on one hand, will give you a fixed rate, but on the other hand, they also charge what's called an early repayment charge, or ERC. So what that tends to be is where you want to maybe move house or do something different, or cash the mortgage in, or end the mortgage. And if that mortgage ends before that fixed term rate, agreed rate ends, then you'll end up paying an early repayment charge. So again, back to all the answers I give on this, it tends to be, depends on your situation, and speak to your broker. But yeah, fixed rate, to finish off, is exactly, knowing exactly what your rate and payment is going to be for God, I'm sorry, I didn't realise I was waffling on so much. Thank you. God, it gets me every time. So fixed rate means that you know exactly what your rate and payment is going to be for a certain amount of time. Next question. Can't wait. Let's have it. Can I use cash for my deposit? Well, let me have a think about that. Depends on your definition of cash. If it's cash in the bank that has come from savings, that's come from salary, or not just savings, but from inheritances, or maybe a house sale or something like that, where the source of the cash can be proved, then yeah, absolutely no problem at all. So yeah, lenders need to know where the source of the funds has come from. So if it's been under your grandma's bed for the past 50 years, that would need to be proved. Might be a bit difficult thinking about it, but it would need to be proved where those funds have come from. So in simple terms, anything large amounts of cash, as in all aspects of society now, need to be explained where they've come from. So in the main, if you're using cash as a deposit, the source of the funds need to be proved from, but in general, the answer is probably no. Okay, ready for the next question? Let's go. I have lots of credit cards and loans. Do you? I'm worried I won't get a mortgage. Okay, that's a really interesting one. Okay, so I might go into waffle land here, but we'll soon find out. So a lot of people, a lot of clients I've spoken to over the years are very concerned about the amount of credit that they have, thinking it will impact on their ability to obtain a mortgage or not. The truth is, it again depends. There's a lot of factors need to be taken into consideration. The general rule is, if you do have some credit and manage it well, then lenders like that because it demonstrates the ability that you're able to manage credit. So when a loan hits, you manage the payments, you pay the payments on time. It shows that you're very, very good with credit, which is basically what a credit score is. So they work out that your behaviour towards credit is responsible. Responsible lending is probably a term that you've heard many, many times. Similarly though, if you've too many, then that will impact on your income. So when your broker, during the process of speaking with your broker, they'll conduct what's called a fact find or fact check. And basically that is a KYC, so a bit of an acronym there. Know your customer is what KYC is. And what that means is they will run through what your situation is, not only who you are, who you're married to, how many children you've got, what you do for a living, what your wages are. But key to that is also to understand what level of credit that you've got and whether that's been managed well. So in the previous question we mentioned about credit reports, that's reflected on that. But interestingly, some lenders really sort of take it to heart about the amount of credit they have, because it impacts on your affordability. So it would reduce your maximum loan. Similarly though, there are some lenders out there who have what we call a no debt to income ratio. So what that means is they will effectively ignore to a certain extent the amount of debt that you've got, because you can make the payments. They work out within their criteria that you can afford the payments. So there are lenders out there who will lend no matter how much credit you've got to a certain extent, as long as it fits within their lending criteria. And there are other lenders out there who will take that into account and reduce the loan. So it really does matter which lender that you go with and their particular criteria, which again is another great reason for using a broker, because your broker will understand what your situation is. Similarly, back to that responsible lending, it's important that anything that you and your broker agree upon regarding a mortgage is affordable. I think I've just missed the klaxon.